Needless to say, almost everything related to Bitcoin remains in trend, but one of the significant events in the Bitcoin ecosystem that has gained attention from around the world is the halving, a process ingrained in its protocol to control the supply of new coins. As we approach the next halving, it's crucial to understand its implications on the crypto world and beyond. What is Bitcoin halving? First things first, let's demystify Bitcoin halving. In simple terms, Bitcoin halving is an event that occurs approximately every 4 years or after every 210,000 blocks mined. During this event, the rewards miners receive for validating transactions on the Bitcoin network are halved. Initially set at 50 BTC per block in 2009, it was halved to 25 BTC in 2012, then to 12.5 BTC in 2016, and then to 6.25 BTC in May 2020. The impact of Bitcoin halving on supply and demand dynamics. The significance of Bitcoin halving lies in its impact on the supply and demand dynamics of the cryptocurrency. With the reduction in the rate of new Bitcoin issuance, the supply growth rate decreases. This deflationary mechanism is in stark contrast to traditional fiat currencies, which are subject to inflationary pressures due to central bank policies. Historical price movements surrounding Bitcoin halving. If history is any indication, Bitcoin halving events have been accompanied by significant price movements. The logic behind this lies in the basic economic principle of supply and demand. As the supply of new Bitcoins reduces, assuming demand remains constant or increases, the price tends to appreciate. Let's take a quick look at some historical data. Bitcoin price reached an all-time high in 2021, surpassing $65,000 in November. This surge was attributed to various factors, including the launch of a Bitcoin ETF in the United States, Tesla's investment of $1.5 billion in Bitcoin, and the Coinbase IPO. By March 2024, Bitcoin's price soared to $73,083.50, indicating the continued interest and bullish sentiment surrounding the digital asset. Impact on mining ecosystem. Bitcoin mining, the process through which new Bitcoins are created and transactions are validated, is directly impacted by halving events. As mining rewards are reduced by half, miners must adapt their operations to remain profitable. This typically involves upgrading hardware, optimizing energy efficiency, or relocating to regions with lower electricity costs. In some cases, less efficient miners may be forced to shut down operations altogether. Long-term implications for Bitcoin adoption. Beyond short-term price fluctuations, Bitcoin halving events have long-term implications for its adoption and mainstream acceptance. The inherent scarcity of Bitcoin, coupled with its decentralized nature, positions it as a hedge against inflation and a store of value in turbulent economic times. As central banks continue to print fiat currencies at unprecedented rates, Bitcoin's digital gold narrative gains traction among institutional and retail investors alike. Navigating the Bitcoin halving. Last but not least, Bitcoin halving is a significant event that underscores the cryptocurrency's unique monetary policy and value proposition. As we count down to the next halving, it's essential to approach it with a nuanced understanding of its implications. So buckle up and brace yourselves as we embark on another chapter in the fascinating journey of Bitcoin and its halving phenomenon.